Shall I start? So for industry specific parameters, the very first one that you can see is what? Client matrix. Then what do you see? CC growth. What is CC growth? Constant currency growth. Then we have guidance. Guidance, if you remember, that was revenue guidance. We have some additional parameters also. So let's go one by one. If you remember, I've already talked about revenue guidance. That we can see that in con call. What was con call? Conference call. Okay. Now I'll tell you the importance of revenue guidance. Revenue guidance. Typically, IT companies give revenue guidance. And what is the simple meaning of revenue guidance? It means that, assume I am one of the key people in Infosys, CEO of Infosys or something like that. Then I come for a conference and I tell that me and our company believes that in the coming quarter, our revenues might grow up by, let us say, 12%. Our orders might go up by 15%. The profitability can go up by 6%. Are these actual numbers or expected numbers? Expected numbers. Is this data point given every quarter? Yes. Okay, why quarterly numbers, so every quarter they're going to come up. On call also happens every quarter. So obviously this revenue guidance thing also comes up every quarter. Quickly tell me very logically, how do you analyze whether this guidance is good or bad? How will you tell me this 15% guidance, revenue growth guidance is good or bad? Higher the better. And you can compare either previous quarter, QOQ or YOY. Simple enough. I'll tell you one very important incidence of revenue guidance. When Infosys came up with the result in April 2020, because generally Infosys is the first one to come up with the results, generally. Okay, April 2020, what was so special? Corona. And when the management came up to give the revenue guidance, everyone was like, oh my god, now what revenue guidance will they give? And the management said, this is the first time in the history that we don't want to give any revenue guidance. We don't know how much revenue we'll have in this quarter. We don't know how much will be the profitability in this quarter. We don't know for how long this will go on. We don't know how it will impact our business. And if all these big people in the industry, if they say we don't know, right? Will this be taken in a positive way or in a negative way for Infosys? Negative way, and the share price dropped. So always, whenever you're analyzing any IT company, what is one thing that you have to check? Basic thing that you have to check for IT companies? Revenue guidance. Okay? So revenue guidance, as I mentioned, either you can compare, if you just want to note down, revenue guidance you can compare with what? QOQ or YOY. QOQ or YOY. And quickly tell me very logically, what means higher the better or lower the better? Higher the better. Is this okay? Yes. So let's go on to the next one, which is the client matrix. Okay, I'll tell you all IT companies will come up with such sort of analysis or such sort of presentation. Now what does this tell us? How many $1 million plus clients do we have? I'll give you interpretation for this one. $100 million plus. Can you see this? $100 million plus. What is the latest quarterly data? 37, if you can see here. Correct? 37. What is the meaning of 37? We have 37 clients which generate a revenue of more than $100 million. Each one client generating revenue of more than $100 million. Again, tell me higher the better or lower the better? Higher the better, obviously. But I also compare it with something. And I compare it with $1 million plus also. I'll tell you why. It's a wrong type of analysis if you do only $100 million plus. Because this increases concentration. Right now, can I say 37 clients are most important for Infosys? Because they are the ones which are generating highest revenue. Now you can imagine 10 clients out of these leave and go to TCS. Can I say that can be a substantial problem for Infosys? Yes. So 100 million into 10, so it will be almost 1 billion almost now. So is this risky also if $1 million is almost negligible, $10 million is also negligible, $50 million is also negligible, only one strong category, and that is, are you getting my point? What am I saying? Which three categories? Assume, I'm not talking about Infosys, which three categories are minimal? $1 million, $10 million, and $50 million. All these are assumed very minimal. 10, 20, 25, and maximum in $100 million. That can also be a bit risky. So ensure that there is good diversification, good distribution amongst the clients. Is this also understood? Yes. One last key point that you can check. Very amazing point this is, okay? Constant currency growth. CC growth. Okay, now understand. Whenever you come across any IT company, they'll give you analysis in two different matrices. Number one, they'll say, this is a constant currency revenue growth and this is a normal revenue growth. Seems to be very heavy. It is not heavy at all. It's not difficult at all. Just next 2 minutes for attention. Yes. So here you can see I've taken a very simple example. Assume year 1, for some company, the revenue was how much? Tell me. $5 lakh. Year 2 it was $6 lakh. Growth is 20%. Simple. US dollars mean net profit. $50,000, $60,000. Again, growth is 20%. With me? Yes. Now tell me, when Infosys India is going to present their financial statements, are they going to present the numbers in dollars or in rupees? In rupees. So they'll have to convert it into INR. Okay. Again, I know this is a nonsense rate. I know that. But just for simplicity purpose, of course it is going to be much higher or lower. Of course we'll check that afterwards. But assume INR to USD. 0.14. Okay, INR to USD is 0.14. What is the INR revenue? Tell me. 35 lakh, 71,000, whatever. If in year 2, understand, if in year 2 it goes from 0.13 to 0.14 to 0.13. Your revenue is 46 lakh 15,000. Yes or no? How did I compute 46 lakh 50,000? Now how did I calculate 46 lakh 50,000? $6 lakh multiplied by 0.13. डिवाइड होना चाहिए ना? डिवाइड होना चाहिए. डिवाइडेड बाय पॉइंट है ना? माय बाय. अगेन प्लस कहां पे जाएगा? And mathematics, na? Okay, so it was not USD to INR. In USD to INR we multiply, na? In INR to USD we will divide. Okay? वापस उल्टा कर दिया. It's okay. You understood my emotions, na? Fantastic. So 0.14 and 0.13. Okay. So here, how much is the revenue? 46 lakh 15,385. Now, what is the growth that you can see? 29%. Now wait. Same copy paste figures I put into the right hand side column also. Here you can see 20% growth, 20% growth. We have kept the currency same. Currency conversion same. 0.14, 0.14. Here also put up 20%, 20%. Okay, now pay attention. Whenever we see growth in INR terms, whenever we we see growth in INR terms, it is because of two things. One, because genuinely the revenue has gone up, the turnover has gone up, and number two, because of the currency rate fluctuations. Correct? If our rupee depreciates, okay, so I'll give you a simple example so that I know these rates are not correct, but assume that $1 is equal to 100 rupees for simplicity of math. $1 is equal to 100 rupees this year, and my total revenue in this year is only one. What is the revenue in terms of INR? 100. Next year also I have only $1. Okay, wait, but INR USD rate has gone to 120. Now my revenue is 120, and what will I say? 20% growth in revenues. The constant currency growth was zero. Why? Last year also $1, this year also $1. When I converted into rupees, it was because of the exchange rate that I earned more in my example. So if you want to understand the true growth of any company, ignoring the conversion, what should you check? INR growth or dollar growth? Dollar growth in the business. And that dollar growth in the business is known as CC growth, constant currency growth. We're keeping the currency constant, dollars. Are you with me? Yes? So one last time, try and understand. I have only $1 revenue last year, I have only $1 revenue this year. Tell me, if you compare dollar to dollar, growth or no growth? No growth. Last year $1 is equal to 100 rupees, this year $1 is equal to 120 rupees. 20% growth. Have I done amazing as a businessman? Nothing. It was because of the economy that I gained. Because rupee depreciated, that is why I gained. So if you want to check how much was the growth, I have to check the CC growth. And what is CC growth? Constant currency growth. I'll tell you one amazing example. Have a look at this. Reporting currency growth are given for Infosys and TCS. Again, all numbers taken from their financials. Okay? It is here, reporting currency growth. Your parents are here, don't worry. You might be getting classes getting delayed, now what? Okay. So if we see reporting currency revenue growth, if you see Infosys 8%. So can you tell me what do you mean by Infosys 8%? Assume last year revenue was $100. This year revenue is $108. Everyone with me? TCS, if it was $100, this year it is $106.8. Good. But now see. Oh sorry, this is reporting currency growth. I should have said rupees, not dollars. I should have said rupees. So one more time. 100 rupees last year, this year 108 rupees. Because first one is reporting currency. Now what is reporting currency? INR. And TCS, instead of 100, if you want to write down now, what is reporting currency? It is INR. The currency in which we report. INR. And TCS is how much? 106.8 rupees. Now I want an answer from everyone. So can I say TCS has also not done that bad? 6.8% growth, no? Not bad. Now see the CC numbers. CC revenue growth for Infosys is 5%. TCS is minus 0.8%. How is this possible? What does it mean? This growth, 6.8%, was only and only because of currency fluctuation. In fact, they lost on some orders. And that is why you can see that minus 0.8%. So if you see dollar terms revenue, it might have gone a little bit down. But if you convert into INR, you can see 6.8% growth. That is only and only because of currency conversion, not actual revenue growth. This is something significantly different point. Yes, so whenever I check any IT company, three matrices, which I check without fail. One is client metrics, second one is constant currency growth, and third one is guidance, the revenue guidance, how much guidance they are giving, how much they believe can the company grow in the coming quarter. Okay? One or two small chiller ratios comparatively, revenue growth, core versus digital, okay. This is also one nice ratio, utilization ratio. But important ratio. Killer for understanding. It means that 84.7% efficiency. They are utilizing their employees to their 84.7%. निचोड़ के लिए employees को काम करा. Okay, now you only tell me, if utilization is at 84.7%, can there be a little bit frustration amongst the employees? Can the attrition rate be high? You understand what is attrition? People are leaving the organization. Okay, so now if you see here, 84.7 is the utilization. See the attrition? Compared with TCS and Wipro, Infosys is the highest. So utilization and attrition can be compared with each other. High the human tendency, come on. If you want to utilize me more, bye-bye, I'm going to leave the organization. Okay, when is utilization very important? And as a standalone parameter, understand? As a standalone parameter. Assume that efficiency, this utilization ratio is at 50% right now. Are you with me? Utilization ratio is at 50% right now, let us say. And currently, company is not doing so good. Is there an internal solution for the company? Revenue-wise, company is not doing so good right now. Okay, they want to increase the revenues, they want to increase the profit. What is one solution? Increase the efficiency, increase the utilization of the employees. If that is improved, then I say automatically the revenues and profitability can increase. Yes. What has happened in this case? It's already high. So again, increasing it further. So this is like from the 10 to 6 timing. Assuming 10 to 6 timing for all employees, 84.7% times they're working. That is the highest utilization that they're doing for their employees. Okay, so all kitna work with the same ratio can be a big question. So this was about the utilization, great. Okay, one last point. It's very difficult to take at face value. I know that. Absolutely, absolutely. See, that is why I said, I'll tell you, utilizing these figures for analysis is really difficult. Only that is why whatever I written here, what are the three basic? For IT company, only three basic. What are these? Line metrics, constant currency growth, guidance, full stop. Others, checking them and putting your analysis is very subjective. And that is why written that is additional. Then you might be like, why have you mentioned? Because analysts will talk about this. And then you'll be like, oh my god, I don't know this. So just so that you should be familiar with this terms, I'm telling this to you. But I also don't use these additional parameters. Basics I shall use them. Okay? Yes. Correct. So many times, if you have heard about this, IT companies have a lot of people on bench. So what do you mean by people are on bench? They come to the office, they sit and they are not delivered for any client. Buffer employees. So more buffer, they'll be just, that is going to create a problem also. But they have to keep some buffer. Some buffer is required. You can't have zero buffer. Okay? So this is about, of course, billable employees. Yes. Employee attrition rate, we talked about. One last point before we're done with Infosys. Key points. See, if you can see, whenever time tables go through the notes for Infosys also, I've also talked about a few more in-depth points, but some different points is what I'm explaining. Okay. One last point I want to tell you is about localization. This is also a very important last factor for IT companies. This is on-site versus off-site. I'm sure you might have heard these terms. On-site, off-site. Now what is on-site? Here you can see on-site revenues are those services which are performed at client outside India or at Infosys offices outside India. Okay. Now typically what happens is that if you're sending your employees outside India, so their salary is you have to pay. Plus per day allowance something you have to pay because they're going out of India, right? Will this increase the cost a little bit? Yes. Sometimes if your on-site effort problem is created by the country, I'm sure everyone can recall when Donald Trump was in power. At that time he suddenly said, increase the employment for Americans. We don't want Indians or any other countrymen coming here and taking away our countrymen's jobs. And many companies were forced to employ people localites, and that is what we mean by localization. Now you can imagine if localites are hired, especially in USA, is their cost dramatically going to increase? Yes. Okay, so keep a watch for this as well. Is this on-site effort very high or not? In case of Infosys, it's like 3:1, still fair enough. If localization, so on-site effort is more, it may create problems if the government changes their stance. Is this clear? Yes. One last point I want to add up is, like I told, for any IT companies, you can go back to the revenue guidance. Revenue guidance slide. For IT companies, like revenue guidance is really important. For any companies in the infra sector, you can write down. For any companies in the infra sector, for any companies in the infra sector, is revenue guidance given? The infra companies give revenue guidance. They declare their order book. Similar to, it's not exactly similar, but I can replace these. So that's why we are writing in that same column. So just write down in case of infra companies, order book. Order book is declared. Order book is declared. So order book is not only an estimate. In fact, it tells how many orders do we have in hand. Higher the order book, better it is. Yes, absolutely yes. So generally, if I say a company has 100 rupees of turnover of this year, and their order book is of 500, what does it mean? Growth, okay? Anything else? I'll repeat the question. If company's current year turnover is 100, and if they have an order book of 500, what does it mean? 5 times of current year's income, or can I say, even if they don't win any order for the next 5 years, they'll still be able to sustain aram se. Okay, so higher the order size, better it is. But for some companies, they still restrict the order size. They don't take orders beyond 1 quarter. That is the case for solar industries. We'll get to know when I speak about it in the pro-invested video. But the main reason is fluctuation of raw material prices. They say that if we take an order book and we lock in the price, they say our raw material is such which fluctuates like anything, and we can't take the hit every single time. Sometimes we have to pass on the price. So we take only 1 quarter order books. So it can be different for different companies also. Okay? So have you understood this point? Order book, clear? So today what we learned, most important thing, first we again revisited RX, R10 ratios. Then we went up to 10-pointer analysis. In that I told you cash from operating activities. So our pointer 10 pointer was clear. Then we said that this is only and only for other than banking NBFC. What for banking NBFC? Then we cut out 4 points. So we had a 6-pointer different analysis for banks. Correct? Then we started with banking and we did almost 16 ratios for banks. Not only did we understand the meaning, we first time saw how to check the numbers from PDF. We have to calculate, or it's very well mentioned there. Mentioned there, you just have to put in the numbers and analyze. Then we also checked that other than banking, 2 or 3 important points. Like I showed you the concept of product segment in case of ITC. And for Infosys, I told you 2-3 important parameters which we had not discussed till date, which is about the revenue guidance, constant currency metrics growth, and also the client metrics. 3 major points. Okay. So anyways, fundamental analysis this time, whatever I thought, I've also given a lot of things in the notes, especially these 3 companies. I've given a lot more. You can just keep on reading and reading. The more you read, the more you get the knowledge. You'll be interested to read further. The teaching part, technically speaking, ends just before ICICI Bank. Everyone, whenever you want to do revision, teaching part ends before ICICI Bank. The case studies are given at the end, if you want to refer to them. But I still gave the important ideas, huh? Achha, before Infosys, sorry. Infosys is the first one, is it? Infosys is the first. Then just before Infosys it ends. 3 case studies are given in the book at the end. So whenever time permits to read through that. Also very important, don't lose touch with the subject. Keep on reading, keep on asking questions. By the way, we also have a separate WhatsApp number. So if you want to note that, you can ask your queries also. So the number is 7447682586. You can get your WhatsApp queries solved. If you can't, if you feel bored of typing, you can also send an audio note, and my team will get back to you with the queries. If the queries are a little bit big and if you can't type it out on WhatsApp, then we have a separate email ID as well. research@rachanaranade.com. So you can also just shoot your query on this email ID. Again, my team will surely get back to you. Okay. .com. research@rachanaranade.com. And also in the app also you can ask queries. So that is also not a problem. You can surely go through this. So, mobile number. In FA 1.0 there was just 1 point which I covered this time in DSM 2.0, and that was about the pledge shares. Those who have done DSM 2.0, do you remember what was pledge shares? Any owner, if he's in need of money, he can go to the bank and take a loan. Yes. What will the bank ask for? Give me some security. Can you give a home as a security? Yes. Can you give a car as whatever, any asset as a security? But if the promoter says I have none of these right now, or I don't want to give these as a security right now, promoter says I'll give my own shares as a security. That is called as pledging of shares. This is not considered as a good sign if promoter is pledging his own shares. Okay. So if you want to check where can we see pledged shares? Here, even if you go to screens, and if you want to add up in our FA 2.0, if you want to add that also, can I just type here? And everyone is pro now. Pledge, see, pledge percentage. Can you see here? And the pledge percentage, I don't know, pledge percentage is less than 1, no? So is less, I don't know whether it takes point something or not. It's less than 1. Don't want pledge percentage more than 1. So I don't know, does it take 0 is equal to, just try this out. I'm not sure whether it is equal to. ले लिया ना, क्यों ले लिया? अरे ये 29 now it is down to 24. 5 निकल गए. Place percentage, so it is taking is equal to also because still now we have taken only greater than and less than. It's taking is equal to also. So place percentage, हाँ? Greater than 1 फिर वो निकालना ही पड़ेगा अपने को. मतलब हाँ तो I'll have to remove this query only ना? नहीं. It's only greater than 1. अच्छा, got it. You want to know only those 5 companies, okay? हाँ? Oh God. 7.64% Asian Paints. What's wrong with this company? Imam 35%. Let's also I'll also show you BSc India website. We can just also one more additional way to check it. BSc India. Okay, here you can type Asian Paints. And Asian Paints. I'm just going down. Here you can see shareholding pattern. Yes, I'm just clicking on this. Then promoter. Okay. यहाँ पे. This is the amount 1,188 crores of pledged holding. Oh my God. दया कुछ तो बोल पड़े. Again, as I mentioned, multiple places you get. It's about how where you are comfortable with. So now we should analyze when have they actually pledged it and why have they pledged it. Is there any reason Asian Paints money back? Because otherwise the financials are good. It was fitting into our revenue growth, this, that, everything, and we pledge percentage. So we will check also for this one any specific point why they. You know the reason why they pledged? Other question. I have not checked the news. And before that. So we can also check, we can go into details also to check which quarter there was a pledge percentage and whether it is increasing or decreasing. Okay. Oh, possible. If they have used it for hedging purpose against the oil prices. So again, all these is like drilling down deep and deep and deep. It's, I mean, there's an end to this. We have 5,000 plus companies, right? Figure it out. I'll tell you, I'm a bad reader. I watch videos. So I feel that's a quicker way to gain knowledge rather than reading books. I know reading books. An ideal teacher should give an answer. I should at least give you 10, 15 names. And I can give you all names which I have not read also. But I have not read it. Would you want to add a few books? Sure, why not? Psychology of money, but I thought it was only about fundamental. That's more personal finance. It's more about personal life. So what I do, name of the book, space bar, book summary. Listen to the book in 10 minutes, 15 minutes, and I get the crux. So, lazy people. Sorry, just before that, if you want some book on fundamental analysis, balance sheet analysis, P&L analysis, I recommend this book to everyone. That is the only book I've read from first letter to the last letter, Romancing the Balance Sheet. Fantastic book by Anil Lamba. Absolute basics. No one can, I mean, whatever reviews I've heard, none of them have told me that this is better than Romancing the Balance Sheet. And I can confidently tell you about that book because I've not heard the book summary, I've read it. Fantastic book, those who want to get their basics right. Very simple means absolutely simple for beginners. Sorry. Oh, yes, quarterly magic numbers. Okay, so basically, while we were having our breakfast break, see, I've done this also, quarterly magic numbers. I've done my own screen, just as an example. This can be something like pretty basic. What is this? You can keep on adding queries. I just did this quickly yesterday. QOQ sales. You know everyone know QOQ sales? Quarter on quarter sales is greater than 40. Last year quarterly comparison, this quarter should be more than 40% in sales. And last year quarter profit should be greater than, so this year profit should be greater than 30% as compared to previous quarter profit. You can add as many as you want. You can also go like, I'm not sure, let me just check. And Q4, does it take that? No. QOQ sales hai. QOQ quarterly profit growth is there. But let me check and I'll get back to you because in one video while I was searching on how to do screens, I remember someone doing like Q4 is greater than Q3 is greater than Q2 is greater than Q1 and it's a big query that I was just viewing. So every single quarter there has been a growth. So that can also be checked. It might be in screens also. Let me just check once. In this popular formulas, highest YOY, all latest quarterly results mein correct hai. Quarterly growers. See, net profit latest quarter is greater than net profit preceding quarter, and net profit preceding quarter is greater than net profit 2 quarters back, and net profit 2 quarters back is greater than net profit 3 quarters back. Fantastic, right? So you can get a very nice growth. So if you want, you can write down this name. It's a quarterly grower screener. Quarterly grower. And why am I telling this to you? Because we are in the quarter season right now, Q4 season right now. So put on the screen, and you can, if you want an update, see this is very good. Get updates by email. I'll tell you. Go to screens. Okay, in screens just scroll down. In popular themes, in popular formulas, in quarterly results. In quarterly results, you can see quarterly growers. Okay. So, very much time to see that. One last question maybe. Yeah. That is also a very good book. Arre baap re. There's a very nice YouTube video on that. I'll share the YouTube. Screen. Oh, I know. There's a screen on coffee can investing by the way. That's same, yeah. ROC 15%. I think it's the same coffee can investing. See, ROA 15% and average return on capital employed 10 years is greater than 15. Okay, sales growth. So this is what is explained. I can share the video as well. You can just go on YouTube coffee can investing. There's a very nice animated video on coffee can investing that I watched. So surely watch that for time permits. No doubt. Okay, cool. Wow. I think it was an amazing 4 days session. Today we were a little bit chill, na? During the breakfast we just stretched it over. But I feel that this was the first time I taught so much of economics in any batch. But it was fun. In our basics of stock market, the youngest kid in the class was I guess 17 or you were one. Was it 18 years? 16 years old. And this time you have lost. Because instead of 16 years you have a 12-year boy. And were you the oldest one in the BSM class? There was one more, Mr. Bukle. And if I may ask your age, 59. Wow. So the range of 12 to 59. And with a father, daughter, duo in the class, a mother, daughter, duo in the class. Anyone? Only one pillu in the class. So it was an amazing diversity as well. This time girls are also present in good numbers. And I wish you all the best. I hope with these 4 days you have understood that finance is not that difficult. In fact, the one who was doing MBA finance, she has also told in the break off camera that ma'am, when you ask who is from finance background, we do raise hands, agreed, but we have not taught all these things when we even do MBA finance. So we are as good, almost at par with these guys. So don't ever feel that, oh my god, I'm from non-finance background, ab kya? So don't have that in your mind. Always keep on analyzing, you'll surely get to go more and more places. Fundamental analysis is 100% about long-term investing. Please don't fall in for short-term traps. I believe one basic expectation that I will also talk about in DSM course, set your basic expectations right. Finding multi-baggers, investing in risky stocks, they're going to lead you, maybe they lead you nowhere. Not every single person is able to find a multi-bagger. Till date, I barely have found out 1 or 2 multi-baggers, and I've started investing in 2016. And I tell you the misery that when we feel that this might be, one of the best examples was Dixon Technologies. I got it in IPO. Whenever time comes, you can check what amazing multi-bagger I got that. But I had 8 stocks. It's like nothing. So initial investment of only 15,000 rupees. So whenever you try to find out multi-baggers, you are not 100% confident. That is why always amount will be less. And when that goes as a multi-bagger, then you feel that I should have invested more here. Instead of that, find fundamentally strong companies. Be confident about your analysis, and then invest with proper investment amount. Be it 1/3, but then it should be full quota. And then even if you get like 10 to 15% return, the amount of profit will actually be a little bit more than the multi-bagger profit also, because their amount invested itself is very less. The profit rupees will be more in fundamentally strong companies because you're more confident, you're putting quantity in that, you have more shares of that company. So never ever feel bad that I'm not able to find out multi-baggers. Go ahead with strong companies, follow the quarterly results, follow the economy analysis only once a month, follow the quarterly numbers only once in 3 months. So I think with this, you can easily do your own analysis, you can easily keep track of things. If you have any doubt, of course, I have given the numbers. I wish you all the very best, and thank you for the patient listening for almost 16 hours in the last 4 days. Thank you. Thanks a lot.